Good day, everyone. Well, we've got a slaughterhouse five kind of market where a lot of names are getting hit, but it's been coming. You'll notice that uh, the window, the micro window, call it, of opportunity during the Trump rally shut pretty quickly the last few days. We haven't really had any names come through except well, we had Qualcomm. And that was a low-risk pocket pivot, but it was a fake out. And we did say, of course, in the write-up that you should wait until it pulls back to its 50-day because the markets are risky here. We had a outside reversal on the S&P on high volume yesterday. Plus, we've seen a number of these names just not act right. They were trying to round out their bottoms last week. But these names have failed. Names like Acacia, ACIA, and a number of other names that we've talked about have pretty much all failed.
Like
So that's
Nutanix, another one. Look at Nutanix, just getting
yeah,
bombed.
that's an IPO. A bunch of these IPOs that looked interesting. I think we may have mentioned a couple of them as not as actionable, but as ones for your watch list. QTNA is another IPO. ZTO. These are names that looked interesting when the markets were better, and they change on a dime. Markets change on a dime, and these IPOs, which are more vulnerable, being IPOs, will get hit harder. And so in a day or two, they're off several percent. So naturally, no one would have taken positions in those because they weren't ready. And same with the stocks that have been rounding out. Maybe you scored on Acacia. It was up several percent in one day on a buy point, and we did mention that in our reports. But this is a kind of market where we've always said you take your profits when you have them. So with a name like Acacia, where it's rounding out and you get your 7% in a day, you should take at least partial profits on that one. There was the big one, the MYOV, MYOV. That one was up nearly
Like
20%.
20% move in one day after the pocket pivot. So that one was a good one.
Yeah, that's a classic.
Could have sold into that one. So
Yeah, and then we wrote in our follow-up on MYOV before the open that this is a name where you're sitting on a huge profit, so you should keep your stops extra tight, and if it starts to head lower the next day, you should take your profits. You shouldn't wait around. And sure enough, this thing opened at I think 14 and a quarter. So it opened basically where it closed, and it gave you about 3 minutes to get out of the position. Well, basically, I think in a few minutes it went to 14, then 13.9, and there you go. You take your profits there because you're sitting on if you're wrong and the thing wants to go higher. I mean, I suppose you could get back in, but in that case, you want to be very, very quick about taking profits in a name like that. The only reason in MYOV that you'd hold it overnight instead of selling at the close is because it's doing everything right, and in a better market environment, this thing could gap up at the next day, and it could actually end up going to new highs. So you don't necessarily want to just sell at the close, sell your whole position at the close. But anyway, yeah, it was interesting because you had a few minutes to get out of this, and markets are usually not very forgiving. Well, I suppose that's not very forgiving. You only had a few minutes. It's not like the 90s where you had a couple hours to dally around and figure out what you want to do. Now, the Fed CME futures has priced in a 98.6% chance of a rate hike when the Fed meets later this month. And the thing is, just giving you a bit of a backdrop, the serious troubles, there's big troubles in the European banking sector. They're not going to go away. There's an upcoming meeting in Italy because of the situation, and that could be another nail in the coffin for the EU. There's also this insurmountable level of debt generated starting in 2009, and that's not just going to vanish. And since 1929, and you can probably go back before that point, but since 1929, history has shown that rate hikes are often what bursts bubbles. And that that's my concern here, is that this is going to be the second rate hike the Fed has done in this QE environment. And granted, the yield curves are steepening, and we're going to a tightening phase, and that's good in the long run. But it doesn't mean that we can just get a soft landing. And based on history anyway, I would bet that that the landing could be very, very hard. I mean, some people like Bill Gross and Jimmy Rogers, and I mean a number of names out there, notable names, who have all said the same thing. They said there's no way this is gonna end pretty. And so, you know, if you look back at bubbles that burst like 1929 or 1987 or the year 2000, it was necessary to have a very, very onerous bear market, which was equivalent to hitting the reset button, because then you could clear the decks and make way for a glorious new bull market. And that, of course, is what happened in those three cases. I don't see why that wouldn't happen again. But as you all know, we don't try to predict a non-existent future. We prefer to focus on what our stocks are telling us to do in real time. And as I said at the beginning, this has been a bit of a slaughterhouse five for many stocks after that small window of opportunity that came after the presidential election. But this market, again, is this recent market's another lesson why stops need to be kept very tight, and how markets can quickly change. So it's always important to remain fluid and not get wedded to any bullish or bearish camp. It's obvious that a number of these tech names have been taking it on the chin. Even during the Trump rally, they were the laggards. Super caps such as Facebook, Google, Amazon, these are names that are obviously on a price volume basis, they're looking quite ill. And these are leaders. These are institutional leaders. This is where the institutions like to park their money, because these are the names that tend to do well. So it doesn't bode well that those names are not looking good. And as far as we had, I talked about Qualcomm. We mentioned that one. It had that pair of 5-day pocket pivots, and then another pocket pivot yesterday. But it's instructive that this is a name that it looks good at one point, but then quickly, you know, in a day's time, no longer looks any good.
Yeah, Dr. Fay, remember what we were talking about last night, though? I pointed out that there was like a 2.5 million share block crossed right at the close, which looked like an end of the month type of thing. I don't know exactly how that one works, who they're crossing 2.5 million shares to, and who's selling it and who's buying it. But that was what gave the volume that last minute push to clear a pocket pivot volume signature. So in my mind, that thing was suspect from the very beginning, and I think that's why we decided to soft pedal it in the report that you sent out yesterday. So, but you're seeing all of these things. This is a short now, okay? This is morphed into a short. It may find support along the lows here, just above, say, 64, 65. But any rallies into the 50-day from here are shortable, and you're seeing these everywhere. Okay, like you were pointing out, Facebook. Sorry to interrupt, but
no, let's go talk stocks now.
I mean, look at Facebook. Facebook broke the 200-day line. Okay, then they rallied the thing up to the 20-day line. Now that's not an uncommon move to see a stock. It turns into a late-stage failed base right here around the 124 level on the gap down, and then it rolls through the 200-day line, rallies back to the 20-day. It can't get above the 20-day. So if you were alert to this yesterday, if you're a short seller and you understand the techniques. And one of my fears about putting out reports on short sale targets in this market is that it's still very difficult. And sometimes when things look very ugly, they can flip on you. And inexperienced people who haven't read any of the books that we've put out on short selling and the discussions we've had on short selling can get set up to get creamed if they're not experienced and they don't react fast enough. So we don't, a lot of times I'll talk about, most of the time I'm talking about the short sale setups in these webinars. I think we were talking about this one last week, that if it fails back through the 200-day line, it's a short again. And you could have, if you were really enterprising and you saw a lot of other stocks starting to fail yesterday at the same time, all these big stock NASDAQ names, then you could have jumped on it based on the failure at the 20-day line looking for a break. And then once you got that, you'd be all over it. And you get another shot to hit it this morning, and it's continuing lower. Maybe it finds it bounces off these lows, maybe not. But that becomes a short. Look at Netflix. And here's Netflix. We talked about this before as a big potential pod. So it's now on the break of the 20-day line. It's now failing. That's your first sign. If you read the latest book on short selling, the first sign of a late-stage base failure or a right-side pod failure is going to be a breach of the 20-day line. And so you get this big pod pattern up here, and you break the 200-day line here. You rally up into it over the last couple of days. There is some stupid news. One was I don't know, they're partnering with TiVo, like anybody watches TiVo anymore, and then yesterday that they're offering a new service that allows users to download content, and it's free. Okay, well that's nice. It's a new service, but they're not going to make any extra revenue from it. So all that does is set up a short around the 120 level, and on the 620 chart, if you were alert to this, you would have seen it. And you're an alert short seller, and you listen to what we talk about in these webinars. So that's broken now. It's sitting at the 50-day line here. Major confirmation would come on a bust of the 50-day line. Wouldn't surprise me if it happened. So that's breaking down. And if Dr. K, you mentioned Google, right?
Yeah.
Here we go. And here's a classic maneuver. It's a late-stage failure out of a big sloppy double bottom base, if you guys can see that. There it is. And you can see the late-stage failure here. So it fails through the 20-day line, breaks down, rallies back up to the 20-day line and the 50-day line, breaks down again, rallies back up to the 50-day line where it becomes shortable, and it rolls over. So, over the weekend, and I'm going to say Monday night, it suddenly dawned on me what's going on in this market. And if you stop and think about it, there's a lot of weird garbage that goes on. And let's think back to the original sell-off when it looked like Trump was ahead and Hillary was going to jail. And then you had the weekend gap up off the lows, which happened somewhere, I don't know, where was that? In here? Right here. I think this was the gap up on the NASDAQ on, what day was that? Yeah, that was on the 7th. So that was the Monday after which the FBI Director Comey said that they had no basis for prosecuting Hillary. And so the market gapped up real big. And then, of course, we had the big spin out after the election, and then it continued higher in the so-called Trump rally that all of the talking heads are babbling about. Real quick though, I just want to give you one. Maybe I'd watch possibly shorting some of these big financials. They're all moving up on this promise of Dodd-Frank being rolled back and also higher interest rates. But the reality is, I don't think the Fed raises more than once over the next several months. If they do, like Dr. K was saying, I think they're going to blow the bubble apart. And so these things have gone up so much. I'm looking for some sort of failure here, possibly on a Goldman, because it's got a big pod. So keeping an eye on that. I actually have been putting out teeny tiny bits of it up here on the 620. Let me get to the 620 chart. Where did he go? I know you're here somewhere. There he is. Because you got the MACD stretch, okay, if you look at this. You've got the MACD stretch here, and now you're starting to roll over. So it's slowing down a little bit. So I'm looking for a reversal. If it breaks the 6-period line, then I might have some short-term confirmation on that 5-minute chart. But it's still sort of pushing. But to me, okay, the financials rallying, the oil's rallying, the stuff stocks like VMC, Vulcan Materials, these all gapped up, and they've been rallying. Dicom rallied, and now it totally blew up after earnings. So, it doesn't, just because Trump's coming into office doesn't mean these policies are set in stone and that, they're going to be favorable to everybody in every single way possible. So I think a lot of this movement in these names is BS. And let's look at, for example, the oil stocks. If EOG is rocking here, so let's look at it on a weekly chart. So it's coming out of this big sort of pod-like structure. I was looking at Devon, and there's a whole bunch of these. I mean, you could probably pick one. This is another one kind of coming out of a pod-like structure. Come on, give me some tickers for oils. Who's got a favorite oil? Here's Fang, one of my favorites. BCEI, trying to come off the lows. That's kind of a dog. Silica Holdings, that's looking pretty good. But if we check this, you're kind of in a big pot, okay? So I think even the oils are subject to potential failures on these massive rallies, all because the price of oil, USO, is doing this. Now, I don't get it, okay? It's really just sitting in about a 5-month range after making a low here. So to me, it seems exaggerated. And what it looks like has been going on back since, when the market rallied up off the lows. So when Hillary was determined that, the FBI said they're not going to prosecute her, and that was back in early November, you had stocks selling off, and then they suddenly turn and rally on that news. But then they supposedly sell off when Trump is going to win the election, but then they rally once he wins the election. So what was this rally on the Monday prior to the election all about? Because it wasn't such a bad thing that Trump became president. Yes, I mean, at least that's what we're hearing now, according to how the market's acted since the election. So it almost seems like they're using news. They sell the market off for 9 days in a row, and then they use the news flow to their advantage, institutions do, and they can jack the market back up and let everything rally. At the same time this is going on, names like Amazon, for example, which turned into a short on Monday when it broke the 20-day line here, but notice here it ran into resistance near the 50-day line, which is also right at the 10-week line right here. You can see that. So these stocks all rallied in here as well, and now they're rolling over, and the market is rolling over with it. So now they're telling you that things are going awry here, and the market has some trouble. So to me, there's like this alibiing, and then it provides cover. The different movements back and forth, like the NASDAQ stocks rallying, provide cover for selling in other areas. And now we have the oil stocks rallying, which in my view jacks the S&P and props it along with the Dow. And you have the financials still going, like Goldman and JP Morgan and whatnot, and helps to prop the S&P and the Dow while they're selling the NASDAQ off hard yesterday, and also the Russell 2000, which is now down 4 days in a row. And this is delayed. So what's the Russell down? Let's see. I actually have a quote here. It's down 2% right now, so 1320. So anyways, at the risk of running out of breath here, you get the idea of what I'm talking about. That it looks like what we're getting here is this sort of systematic institutional distribution, all being done while the market looks good. And everybody who went to an IBD seminar or workshop and has like 5 rules of why the market's good, sits there thinking that everything looks fine. But unless you're experienced in understanding how institutions work the markets, especially at a point where we could be at an inflection point, it starts to become evident what the possibility here is in terms of using the news to alibi rallies in certain sectors, which then influence the indexes in certain ways that provide cover for the market, for the institutions to be selling one part of the market while another part is jacking and propping the market up. We're seeing the Dow at 52. Didn't we just go up 90 points or something? So I'm short up to my eyeballs right now.
Yeah, no, the Dow was up 90 points. Well, of course, on a percentage basis, it's not very much, but yeah, we were up 90, and now, I mean, it's a market that has trouble. This is a market that if you look at the S&P, there's a tug of war going on intraday, and I think that there's enough weight right now that it's going to finally, it's yanking down the industrials.
Well, I think what's happening right now is institutions are moving from high beta stuff to low beta. And that also provides the index movement that gives them the alibi for selling everywhere else. So, for example, oil stocks are defensive, probably lower beta, although that wasn't the case last year. And so maybe they're hiding in there thinking that the price of oil is going to stabilize. And they also move into some of the bigger cap names, the drug names, and financials maybe lower beta. I don't know. But it seems like they're probably trying to find places to reallocate and get out of the high beta stuff, because we're going to come down hard, and all they need to do is outperform on a relative basis, which means if the S&P is down 50% and they're down 40%, they win. That's how the institutional game is played.
Because of course, everyone should know that these institutions have generally a mandate where they have to be 90% invested at all times. So they've got to find the lowest beta, the places of safety. And what Gil described is what I've always said is this is a musical chairs market. And
highly rotational.
Yes, and we saw that. I talked about how the markets have been highly irregular. well, every year has been more challenging, but certainly since July they've been highly irregular. And September 9th was a great alibi when one of the Fed heads came out and talked about, he said, well, rates should get hiked, and he'd always had that position. It wasn't like that big a news event. The institutions use that to rotate out of a lot of names. I mean, we saw the market averages like the Nasdaq down, 2.5% in one day, which is quite a bit, especially after it baby stepped higher, in July and August. So like in one day, it reverses out, a few weeks of gains. These are highly manipulated environments, which that makes them a bit irregular. And the question is, when does this come to an end? Because as we all know, change is the only constant when it comes to markets. So yeah, right now I just noticed we have the Nasdaq. It hit bumped up against this 50-day. Now it's trying to bounce. But again, things right now on a stock by stock basis are not looking so good. I just question whether markets are going to do what they've done before, which is anticipate a nasty rate hike or not. I mean, of course, just because it happened before doesn't mean it has to happen again.
I think you could be
now we've got the industrials now are up. These averages are. There's definitely a lot of riptides going on.
It's a lot of manipulation is what it is. And I think you could be starting a major bear market. I mean, the way things are developing so far, unless you show me some other evidence aside from what I've seen over the last 2-3 days, and particularly today seems to underscore all of that with the way things are getting blasted. So as far as I'm concerned, this market's got serious problems. And if you're long anything, you should probably be thinking about getting the hell out of the way, if you haven't done so already. So
also what's interesting is if you pull up just pull up a chart of IEV for example. That's the ETF IEV, Indian Edward Victor.
I shared Europe. Yeah, okay.
Yeah. That takes a bunch of the European stock markets, and averages them. And as you can see, it's been in a bear market for the last since 2014. And you can see that with all these world markets. If EWU, it's the UK stock market. That one is like a mirror of IEV. If you look, just pull up any of these world markets. Even China, FXI. FXI has been in a bear since 2015. So now contrast those markets. Contrast all these world markets against, say, SPY, which is the ETF for the S&P 500, and that's just it's at new highs. So there's a huge divergence going on between the U.S. markets and the global markets, and that's highly irregular because usually markets do have some measure of correlation. I mean, it's not one-to-one, but it's more correlated than what we're seeing right now. And I think it's just these QE distortions have created these pretty spectacular divergences. And again, I think something's got to give. I mean, is the U.S. market going to pull up the rest of the world? That's doubtful, given the troubles in the rest of the world. I think it's the other way around. I think the rest of the world's going to pull down the U.S. market.
I'm with you on that. All I know is right now I'm making pretty good money on the short side today, and the last couple of days have been decent on the short side with things starting to roll over. But I don't sit around and wait or stick to some rigid view, because the one thing I know about this market is it changes very quickly, and it's still a swing trader's market at its core. So even on the long side, I was long some of that MYOV, but once it's up close to 20%, I'm starting to sell into that. And the interesting thing there, Dr. K, is that thing's so thin that even on 5,000 shares, which is all I had, I think the last bit I got out at 1325, and now it's coming in to the top of this base structure here. So this could be setting up, if we got a rally in the market, a bounce, with the Nasdaq at the 50-day right now, you could see maybe this would bounce back to the upside, but that would only probably be a reaction rally. But in any case, you still have to sell into a move like that. And even when I was playing some of these, this had a great move off the lows, and you got to sell into that. Acacia, like you were pointing out earlier, you had a 7-8% move off the line in one of these days here and here. And I kept playing this the same way. You buy it along the 10-day line and it jacks up and you sell into that. And then the last time I sold into it was on Monday, and it was just above around 79. I think I got out just around 79, just underneath, because everything else was starting to come in, and I just blew out of there in a hurry. And it's broken down. So this may need more time to set up, but if you look at it on a weekly, that doesn't look very good. It almost looks like it should be shorted. A lot of these just look pretty grim. And they're everywhere. And they started a while ago. You know, as soon as we started to see some of these names like Acacia, the Twilio, I was thinking, okay, if the market's going to rally, and if it is a new, glorious new bull market, then what you're going to see is a lot of these round out. And I don't think that's happening, and I think we're going to have a bear market before we have a bull market again. Anyways, noticing Goldman Sachs pushing below 224, so maybe it's starting to roll over here on an intraday basis, and I think all of that's been overplayed. So, but there's the 620 chart here. Here we go. Yeah, you can see it's starting to break. So I just pointed it out at around 225, I think, and now we're down below 224 now and dropping. So I've got some out there, like, I don't know, 1,500 shares, nothing huge, but we'll see how this thing plays out. If I do get a clean 620 sell here, which looks like I might, but it may take another hour to develop unless this thing really blows apart and comes in hard. Then I can get more aggressive on this. But again, I'm sort of jumping the gun just a little bit here, because I'm thinking, like I said, there's the pod situation here. If it fails, it's going to fail here. So I'm looking for some sort of reversal intraday, and the place I start is the 620 chart, which is here. And I'm getting that. I got the MACD stretch, a couple of crosses, so I come in after it right in here, and it's starting to flip back in a little bit. Dow's up 63. I think they just flop it around. I think they can manipulate this thing like mad with the oils. Are they still all moving? Let's see. Yeah, that's still
oils are
moving.
still
How's
good.
Exxon? I mean, Exxon looks like a piece of garbage. Chevron's a piece of garbage, but these are the big slow ones. It's CVX, right? No, what is it? No, yeah, CVX is Chevron. But see, I think you're going to see Goldman roll over. So JP Morgan's another one. If we look at that, I mean, you look at that, and that looks great, right? JP Morgan's a little better because it broke out, but it's way extended now. So, you know, it may reverse, but that's not what I'm focusing on. I'm focusing on Goldman, which has the actual pod formation. And the real issue with these generally is the fact that the movement up the right side is so rapid, and you can see from 180 all the way up to where it is now. That's a very rapid move, and it's just not sustainable. At some point, profit taking is just going to drag this turkey back down. So, you know, then what we're looking for is a break through the 20-day line, which is now at 204.82, which is a good 20 points away. That's about 10%. That would confirm it as a late stage failed base, or actually a pod, a punch bowl of death type of failure. So anyways, Dr. K, does the MDM still recognize the super caps as the leadership names, or does it begin to treat the banks and resources as leaders?
It's always fluid, so keep in mind that the list that it follows, just like our focus list, it's a dynamic list that changes with changing markets. It's obviously going to be focused on leaders, however they want to materialize, and these leaders can change. You know, as we know, we've had different sectors lead the way over different market cycles. So it's important to always maintain that fluidity. I remember in 1997, the oils had a huge move. I mean, ridiculous. They'd never made that kind of move where, you know, you could start buying these oils and double your money in a matter of weeks, if not a few months.
What was that, 97, 96, 97?
Yeah, 1997, exactly 1997. Yeah. It was that year. And I had been so conditioned
to not like oil.
Expect. Yeah, I didn't like. No one liked oils. You know, who's going to buy oil? It doesn't do anything. And then all of a sudden, these names are breaking out and cleanly, not in that distorted way. So I missed out on that rally. I just caught the tail end of it. That was about it. But I don't remember really. I think there might have been a couple people who didn't have much experience, so they didn't have that experience working against them, and they got on board some of these names and did pretty well. But it just, again, you have to maintain this very fluid approach. Especially these days where things can change, and in this kind of musical chairs environment with the post-election period, we're seeing a lot of change happen fast, but you also need to be mindful that you don't get swayed into a new hot sector that, you know, then gets cold after a few weeks, and that's what we've been talking about with a lot of these names or groups rather that have like the financials that have barreled higher over the last couple weeks or last few weeks. Doesn't mean that it's sustainable at all, because it's conditioned on a lot of factors. So rather, when you start to see enough names come through your filters in certain groups, then that's an alert that maybe it's worth paying attention to, and those names may become the future leaders that can be added to your watch list.
Anyways, I'm over here just checking through my shorts, and no, I mean my short positions, not my shorts literally. Man, they are just crushing some of these. There were names that were acting pretty well. Some of the telecom and fiber optic related names, Fabrinet was one, but look how that just comes right apart. Light was another one. We had a pocket pivot here coming up to the 50-day line. Look at that, just blowing apart. Finisar,
look at NVIDIA.
I actually tweeted that I thought this was a little bit of an exhaustion move, and sure enough, that's failed. So you're just seeing everything coming apart here. And
yeah,
I don't
NVIDIA
think this
has been the champ, and NVIDIA's off quite a bit today too, which shows that everything's getting taken out.
Yeah, and kaboom, look at that. That thing just comes apart in a big way. That's grim. I mean, you could hit almost anything this morning on the short side, and yesterday if you were on it, you could have been short a lot of different things. So, I mean, Grubhub was another one I saw as a short on the rally. Notice how it doesn't quite get to the 50-day line, but it is up at these highs. Now, if you go to the weekly chart, remember, you got to always look at weekly charts too. You're going to notice, what do you see? A big pod. You see the failure. So this is confirmed as a failure, and it runs right into the 10-week line. So even though it doesn't get to the 50-day line, the way I look at this, I'll short this thing here right at around 39 on the basis of it being at these highs and touching the 10-week moving average. So that becomes a short at that point, and that's working so far. Probably this is 34.55, 34.66 low here, maybe a short-term downside price target. We'll see where it goes from there. But again, somebody's saying, could Ford be having a pocket pivot today? I don't know. What planet are you on, though? You really want to be buying this on a day like today? Do you think this is going to be a new leader and the market's going to turn? I mean, that's what the pattern looks like. So, I'm not sure why you want to buy this thinking it's a pocket pivot. I mean, if you were just looking at this part of the chart, you'd say, oh, yeah, that's a pocket pivot. It's right to the 200-day line. Maybe that makes it a short. But look at the overall pattern. It looks like garbage there. And then you have the context of the general market, which looks like garbage. So why are you looking for long ideas on a day like today? Either you're running for cover, taking profits, assuming you have any, or you're looking to go short. So I don't understand why anybody would be looking at a pocket pivot in this. I mean, right now that would qualify, yes, but it is extended from the 10-day when it starts out. But no, I take that back, because you closed at the 10-day yesterday, so really the gap is coming off the 10-day. But now you're back up to the 200-day in a pattern like that, and I don't know, if you really think this has big money potential, go for it. Let us know how you do, but I sure as hell wouldn't be touching it with a 10-foot pole. Yeah, the market's still flopping around now. I mean, they're clocking everything, so the NASDAQ gets support at the 50-day, so that makes sense. Now, it's really not moving too far off of there, so my guess is it's going to roll through. You just get a little pause here, and then it's just going to roll right through, so I'm not really.
That's actually, I'm curious, because in the old market, well, the pre-election market.
Oh.
No, not the pre-election market. So where there's QE sloshing around in the system through all these central banks, and it still is, of course. But the markets would find a shallow floor, and like they did in September, and then start to baby step higher. So I would love to see this market actually break down through the 50-day, because that would telegraph to me that, okay, maybe something material is finally changing. I mean, certainly we are seeing, the yield curve, there's no debate that the yield curve has steepened. There's no debate on a number of things that have changed for the first time in a number of years. So that tells me that, well, if those things are changing, then the market should also change.
I think they already are. I think the market topped 3 days ago, and you go short and you're making money. So from my perspective, I go with what I'm seeing and I go with it, and I go with it full on. There's no ifs, ands, or buts, or what I would like to see, or what could happen, or where there's a shelf. Or all I know is I'm short and I'm making pretty good money off the peak, and boom, it's coming down. So I'm going to stay with that until I see evidence to the contrary. And right now, I don't see any evidence to the contrary. That's my approach.
Well, that obviously that approach is what
And
we
that's how you
advocate
make money in this market.
when it
You know,
comes
you got to
to
play what you see.
investing money. When it comes to
And play
investing
it.
money, that is always the approach that one should take, and not do all this forecast, future
Yeah, I mean,
predictions and
I
stuff like
got some
that,
people.
because that often will take you out of the track, and you'll have some missed opportunities because you let intellectual arguments get in the
Right.
way of your trading.
Exactly.
But that said, both of us, obviously, we get a lot of questions about, what if this, what if that, and some of them are, they're insightful questions and they're interesting from a historical basis. And obviously, we're market historians, and we take interest in the way markets have been. We're not strangers to saying, yeah, the QE environment started in 2009, et cetera, et cetera. I mean, these things don't, in and of themselves, make you any money, but they're interesting, on a broader picture basis. So yeah, I mean, it's nice to see, the markets have a different tone to them post the elections. And because I know a lot of people have been throwing in the towels over the last few years. Uh, a lot of day traders, of course, have gotten knocked out, but that's in the news. And a lot of hedge funds can't beat the markets. The market trend following wizards can't beat the markets. I think almost every year they've been down, or when in a year when they were up, they were not outperforming the indices. So it's very interesting times, challenging times that have to change at some point, because like we always say, the only thing that stays the same is change.
Well, here's my
How
take
does
on
the
all
market?
that. I think people who aren't able to make money in this market can't see the forest for the trees, because all I know is this. This is all I know, okay? And I'm not bragging. I'm just pointing out a fact. And the fact is I'm working on my fourth straight up year in a row, and I've averaged about 50% over those 4 years. So, to sit there and tell me that this is a difficult environment and you can't make money and blah, 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 it's totally meaningless. And so I think people just have to focus on the setup. So if you see the market telling you to go short, you go short, okay, until it tells you not to be short anymore. So I think right now that's the only thing you need to operate on, is the basis that the setups over the last couple of days have come to fruition, and you have to have an open mind to see them when they occur and then act on them, and now you're making money. Now how much you make is an open question, but you just let the market evidence tell you what's happening. The only thing I would say from a short selling perspective, 2 good days in a row, NASDAQ to the 50-day line. Okay, so this is what I'm watching for, but the S&P is still way above. I think, and this is being propped by the oils, I think, and the financials.
And financials.
Yeah, so what I think you get here is you get a break for the 50-day line. That takes the NASDAQ through the 50-day line and down to this low. So that's kind of what I'm looking at. So I'm not really covering. I have taken some short-term profits on the on some of my positions, partial positions. Like, for example, I'll just give you an example. Like you look at Mobileye, you get the MACD stretch way down here, down at 3620, but now you get the bounce. It can't get through the 20 period line, the blue one, so probably I may just go and lay that all back out that I covered, and let's see if it rolls over. Let's look at Qualcomm, for example. Here's a real quick MACD stretch on the downside. See that? And then you get the cross, so you can cover this, but look at how it can't rally. If this got back up to the 20 period line, then I might hit it, come after it right there at that point. Let's look at Apple. Apple, I'm still short from a couple of days ago, and it's broken down here on the MACD stretch. There's your low, and you turn. Now you're rallying back into the 20 period line, so this is a potential area to come after it. So, I'll take some steps in terms of what I'm seeing on the 620 charts, and I also notice that these are NASDAQ names I'm shorting, Apple, Mobileye, Grub, Qualcomm, all these, and so they may hold with the NASDAQ index at the 50-day line. Now, if this thing busts and just goes through it, let's look at a 620 chart. and you can see it's just bouncing a little bit. So to me, it looks like it could just roll back to the lows. Now, the key here is that the S&P is being propped up by the Dow. Let's go to the Dow here. And that's up on the day. But watch this thing. If this thing reverses and turns red, then all hell is going to break loose. So, and another thing that I'm long is the UVXY, which I bought actually a couple of days ago along around 1060. Hasn't really done much, and you don't need a big position. I'll just play it that way. And the way I trade the UVXY is if I'm seeing evidence on the short side that's telling me the market has a good shot at coming in, then I'll just throw in a little UVXY, kind of like a cherry on top of your sundae, you know, and I got my other short positions and I throw in some UVXY. And I've noticed sometimes you get a lot of juice out of that turkey when the market starts to bust. I know that happened in this move here earlier back in October. So that was, what was that, late October, early November? Yeah, that, so, you know, it'll have nice moves that you can trade. But what I'm doing is I'm trading it on the basis of what I'm seeing in short sale setups. So in other words, those sort of confirm it. So let's see, Dow 6.7, NASDAQ down 52, NDX is leading the charge, down 61. The Russell 2000 though is getting hit the most. What is that? Is that 2%? No, that's 0.16%.
No, Russell's Russell's almost flat right now
yeah,
in
it's
real
actually
time.
holding up okay. So, but you know, I just want to encourage everyone, if you have experience as a trader, don't let this market scare you. It can be conquered, okay? It can be conquered, and don't set yourself up in a mental frame of mind where you say, oh well, it's not this, or it's not that, or it's not the good old days, or whatever. It is what it is, and if you just clear your head and let yourself see what's happening, I think you can make progress. I think it does require an active approach, and for a lot of people, if you have a regular job, that's not so easy. So it is a tough market, but it can be conquered. So, you know, don't get disheartened. Go ahead.
What I find interesting is that you know, you look at I look at or hear, you know, you hear things about how disgruntled, dismayed, frustrated that people are, and you know, I wrote that piece, you know, frustrating markets. You know, yeah, we're not going to say they aren't, but at the same time, here's all the windows of opportunity that have come through. Here's the profit periods that have occurred every single year. Every single year, you've had numerous profitable windows that do occur. You just have to be patient for them, and you have to be quick about it, because when they occur on a dime, and then you got to take your profits. Or if they don't work, then you got to be very quick to minimize your loss, minimize your risk. That's the first rule of investing.
It's a swing trader's market too. It's not a trend followers market, right? Wouldn't you say?
Yeah, I would say that you do get your once in a blue moon NVIDIA, and what's nice about that is that something like NVIDIA doesn't really get ahead of itself. When we talked about it months ago, you know, it kind of steps up in a logical way, and it's not ever getting ahead of itself on a price basis. Whereas obviously names like Amyav, that's an extreme example, but we've had a number of names that we add to the list that do get ahead of themselves, and we've talked about that, where, you know, hey, this is the day that you want to take at least partial profits. But nevertheless, by working the markets in this fashion, you can stair step your account higher. So, you know, when Gil says the last 4 years he's averaged 50%, mid double digits every year, and well, one of these years was a triple digit year. That was what, 2014.
Right.
You know, those are. It just goes to show that it's a consistent performance. It's not a blue moon performance. It's not like he's getting lucky. And I would say the same thing about certain ways I've traded the markets. There have been windows of opportunity that have done well, and unfortunately, if you can't watch the markets during the normal day, you can only watch pre-market and post-market. You know, we've written solutions on how people can deal with this kind of environment and still be profitable. It means putting on fewer trades, really cherry-picking what you want to do, and putting in, you know, you can put buy-stop limits, limit orders on names. All these brokerage services generally offer those types of orders, so that if you see a name that is setting up, you can put a buy stop on it, so you don't have to be there, but also automatically have a stop. If your order gets triggered, then you have a sell stop that protects your downside in the event the order doesn't work. So there's all kinds of ways. These are very easy ways to structure your orders, so that if you can't follow the markets during the day, you're at least still participating. And actually, there are studies that have been done that have shown that that's actually a better way because it takes your emotions out of the equation as opposed to just sitting and watching the markets all the time. I mean, you have to be really seasoned to be able to watch the markets in real time and not let your emotions get swayed. So that study that was done, I think, it does apply to your average trader who will let his emotions bleed into the markets on an intraday basis. Anyway, yeah, keep in mind sell stop, buy stop, and buy limit, all those stop limit types of orders that you can structure into this environment and step your account higher.
Yeah, and don't allow yourself to get mentally locked into a frame of mind that says it's impossible to make money in this market, because it's not. It is possible. Of course, you can't just be dumb and long doing it. So anyways, but you notice how they get the Dow up 88, 86, S&P's back up. So I'm sure the oil stocks and some of the financials. What's the XLF doing? Still running. Yeah, still moving. That's mostly Goldman and JP Morgan. But that looks, yeah, I think this is just all being manipulated around. So to me, the short side is where you want to be. We'll see how this thing pans out. But you can see the distribution in the market. You can see the rotation. I think you can see that there are some serious issues here. So in terms of short targets, I mean, if you were awake earlier this week, we have put out Tesla as a short, and our downside target is 140. So where was the last optimal short sell point? Well, that was on Monday right at the 50-day line, and boom. If you hit it there, you're a happy camper, and you get a nice move to the downside. This is what it looks like on the weekly chart. And I think it's reasonable to think that this thing can head for that low. And I wouldn't be surprised if we get into a really bad bear type market that you see exactly that happen. So, let's see. Any other questions? Anybody have any questions? Anybody have any good short ideas? Or to some extent, you're maybe a day late, a day or two late. I don't know. I guess we'll just see how all this pans out. But I'm watching for the bounces back up into areas of potential resistance. So any other questions? Do you have any questions, Dr. K?
Philosophical ones, spiritual ones.
Yeah, get into a little.
Not to get off topic.
Here. So, but, I'm just I'm watching Goldman. I'm watching some of these financials to see if they start to roll over, and I think eventually you will see that, and that'll probably be confirmation of a real nasty break. Just trying to look around. Look at I don't know, Smith and Wesson. I've been trying to borrow this now, and I can't. So yesterday, a couple days ago, it was at the 20-day line, looked shortable. Looks like it wants to roll over. That's the weekly chart. That looks like a short here. Let's see. I'm wondering if, all these airlines have been rallying too, and I'm wondering if these are going to start to break down. So I'm sort of looking at these as possible reversals. This is what they look like. Like American Airlines, it's like a big pod-like thing. Hawaiian Airlines, like a big pod-like thing as well, I believe. Not so pod-like, but a sort of a late-stage cup with handle breakout, and maybe that's going to fail. So that's something to watch out for. But this is what I'm looking at right now. So I'm watching all of these airlines to see if they fail. And if they do, guess what? Let's look at AAL. High today was 47.09. So you're about 50 cents off of that. You had some heavy breakdowns over the last couple of days, but it found support off the lows and rallied back above the 10-day line. So kind of not really here or there just yet, but something to keep an eye on a lot of these names that have rallied on the promise of a great, Trump policies that are going to make everybody rich and certainly aren't going to run up any debt, right? So those are the names that I'm watching. EA, shorting EA. Yeah, that was a short yesterday at the 50-day line, but that's another one. ATVI, but they're all over the place. I mean, all you had to do is look at even some of the things you're long. Like I was looking at Qualcomm long yesterday. It looked long, but I'm looking at it shorting it up here at 68 because it's at the top of the range, and I thought that was a phony pocket pivot. and boom, there it goes. You know, so even things that are long will generally be some of your better short sale targets, and they work pretty well. What are some of the leaders that could be starting to break down off the peak, aside from financials, even the oils? You know, there's some news that some of the OPEC members, like Russia or somebody, doesn't really like the agreement or doesn't intend to really stick to it, because right now it's all just words, and most of it are Middle Eastern leaders, and you know how good are they at keeping their word? And then the Russia, you know, so can you really rely on all these people? I think things start getting nasty out there, they're going to start trying to sell as much oil as they can. So it could easily fall apart. And if that happens, what happens to the oils? They fall down and go boom, big time. So anyways, take two. Yeah, that's been bucking the trend. But notice how it's because it's been holding up in a little base here, but it's way up there, and now it's starting to break the 20-day line. But it's down, you know, about 5% off the peak. So you're at the 20 line. Maybe it rolls lower. So I kind of like, I'm just looking at, let's go through all these airlines. DAL. See, these are already breaking down off the peak, though. That looks potentially vulnerable. And, of course, why did all these start rallying? Because Warren Buffett got up on TV and told everyone he's buying them. I mean, he's the ultimate crony capitalist. I mean, he buys airlines, and that's probably him pushing these things up before. And then I guess he comes in around here and tells everybody on CNBC that he's buying these. And of course, what happens? They take off, and every idiot on the planet says, "Oh, Warren Buffett's buying it. I got to buy it," because they're all sheep, and we know what happens to sheep. They get slaughtered, right? You guys don't watch the movie Wall Street. In any case, I'm watching some of these. They look vulnerable to further downside. So you got a high here at 48.94. Stock's trading at 48.03 right now, so it's come in. So I'd keep an eye on these as possible failures. And again, you look at the pattern, there's Delta Airlines. What is that? That's a pod. So what I'm looking for in this environment as new shorts, if I missed everything else, are some pod failures where some of these things that have been rallying on the basis of either the OPEC agreement or the so-called Trumpkin stocks, you know, the materials, the defense, the financials, the, I guess we call the airlines the Warren Buffett look what I bought stocks, and you should all buy them too because you're sheep. And I know, I know I can always go on TV and pump my positions to get them moving. That's how Warren Buffett operates. Anyways, any other names? So yeah, airlines look like pods, and I think they have potential to blow apart here. So the only problem is they're kind of down there, so I'm keeping an eye on some of these turkeys. But man, they are just crushing stuff today. This is grim. I mean, I've seen some ugly stuff, but this is really ugly. Look at this, like Cirrus Logic. Here's one that was actually acting pretty well for a while. And look at that. Kaboom. You know, it's trying to play.
There's so many names like this.
MU is another one. Look at that. There's MU. Boom. What else?
Yeah.
What are other ones? I mean, they're all over the place.
FN, I mean, one day.
This market's in trouble, you know. I don't know. I think your MDM should go to a sell and go along the UVXY or whatever VIX thing you like. Because I think this, if we go through the 50 on the NASDAQ, then I think you're heading much lower pretty fast. So we'll see what happens. But it looks great.
It'll be interesting because there's in my journal there's times over the last few years where things looked horrible, just awful, with all the leading names getting shut down, you know, and that was the fucking sorry for but that was the floor. That was the floor of the market, and
yeah,
so
but you know
that's
what?
why
you can't prejudge what you're seeing right now on that basis, right?
Right. You can. That's why I always say, historically speaking, that could get you into trouble. You could get into a situation like, you know, with the oils in '97. You know, I had experience working against me. So always remind yourself of that as an investor or a trader. Don't let history cloud your view necessarily. That's why I said at the beginning or earlier in this broadcast, I would love to see the NASDAQ really fall through this 50-day properly, because that would telegraph to me, okay, finally we're getting a correction that doesn't have to do with China. It has to do with what's going on right now in this market environment, and that would be good. That would be a good step in the right direction. But at the same time, you know, if this is the floor, you know, and the market starts to baby step its way higher again, that'll be a little disheartening. But that doesn't mean there won't be profit opportunities. It just means that the tone of the market may not have changed as much as I would like to see it. But the market's going to do what it's going to do, you know. So, you know, never put your own biases onto the market because it doesn't care.
Yeah.
So I think we're at an interesting tipping point here of sorts because I'm looking at the Nasdaq and it's just, you know, hanging on the 50-day.
Yeah.
Yeah.
So it looks grim, but okay, so you guys, hopefully I'm giving you some idea of where you might be able to go on the short side. Look at some of these semiconductors that have gotten extended to the upside. Look at some of these airlines. Look at some of the financials.
Look at the SOX index.
Where you see,
look at the SOX. How much the SOX is off today in one day. It's off the most I think it's been in what, 3 years or something. I mean, it's off almost
basically
4%.
Isn't it? It's like a lot of it, that's a big way. See, now we're up 75. Watch for this to get really nasty. Here's what I say you do. Go buy a 5% UVXY position. Use 10 as your stop, the number 10, price 10, and then just see what happens, okay? That's my call. MSCC, somebody's pointing out. Yeah, that one's, so all these are starting to fail, so I don't know, is that a pot? I don't know, not really. But you're seeing all these fail, so they could become later stage base breakout failures, okay? I mean, throw in Apple. I think Apple looks like trouble too. I'm actually short this one. It ran into resistance up here, but notice how it runs into resistance at the 10-week moving average earlier this week. And now it's below the 20-day, so you can short it using the 20-day as your stop. And you're looking for a move down to the 200-day, which is 104. Not too far, but you know, if you look at this, if this thing breaks to the downside, you guys notice I didn't use my pen once today? I'm going to use it now. You have sort of this fractal head and shoulders, or if you want to, you can be a little more specific here, and you could say this is your left shoulder, this is your head, and this is your right shoulder, and you're going down, baby. Anyways, and that's a short right here. You use it to 20-day line. It's kind of a safe short. It's like a beginner short. I kind of use Apple as a sort of an index. It's like a Q sort of thing, so it's like buying the SQQQ, I guess, but with a little more juice if it breaks. So, although probably the SQQ is down more today, but in any case, you know, that's one that looks shortable, and you could have hit Facebook, but you know, you have to be. I guess Apple is a beginner short using what is that now? The 112. Well, I can't see the number. 110.98 is your stop. That's pretty tight. So, you know, maybe a little bit, you give another buck past that. Even if you went up to the 50-day line, that's 3% away. That's nothing. So, oh, here's one I'm actually short too that, you know, this one looks shortable to me. I could short this one earlier with Netflix because Netflix announced a deal with TiVo. And like I said, TiVo, what's TiVo? Nobody watches TiVo anymore. So that was like a failure. It's sort of a cup with handle breakout failure. So, and I'm trying to decide, let's see, let me shrink this, see, we can see what you got. It sort of has pod-like characteristics. See the big pod, and now it's sort of a pod with a cup with a handle. So it's kind of multiple, it's multiply fractal there, right? There's a fractal cup with handle, then a cup with handle, fractal again. Both of these are kind of pods, and now it's starting to fail. So I'm actually short this turkey too. And notice you had a nice short point at 22 along with Netflix at the same time, which is now coming down. So I don't know. This looks pretty bad today. We'll see what happens. Anyways, that's all I've got. Somebody says, Q, Wicked Witch of the West, want a little fire, Scarecrow? Yeah, really. Anyways, this is kind of exciting. We'll see what happens. So that's what I'd be looking for on the short side. And if you're experienced on the short side and you've read the latest book on short selling, which I think is required reading for anybody who thinks they're going to step off of the cliff onto the short side, and you're not experienced, go to cash. So that's all I've got, you guys. Thanks for showing up. You got anything, Dr. K?
Yeah, no, I think we're good. Actually, I just had an afterthought on the TiVo thing. I wouldn't be surprised if Netflix knows that there's a lot of people who don't change. Like, a lot of people don't know what Netflix is, or let's say they know about it, but they haven't changed, and they're still sitting on TiVo. Yeah. Maybe this is a way for them to move them over to the Netflix platform. But at any rate, right now,
so far all it's done is set up a nice short. All it's
Yeah,
done so far
exactly.
is set up a nice short sale opportunity. So
And fundamental arguments can work, but they're a lot slower, as we know, so they're not really
yeah,
used to trade upon.
yeah, and I just trade TiVo and Netflix on the basis of their technicals. And as far as I'm concerned, they were shorts 2 days ago, so or 3 days ago, or something like that. Anyways, thanks for showing up, you guys. Hopefully it's helpful, but it's if you're trying to get short here, you're a couple of days late on some of these NASDAQ tech names, but you can go after the airlines and some of these other pod-like things like the Goldman Sachs, maybe if it fails. So you're still watching that. Let's just take one last look at it before I go. And whoop, that's not it. Maybe that's what it'll look like later. But you can see it's building a little intraday base, starting to set up for the 620 break. Watch for this. Unless it breaks out again. But I'm guessing if the market rolls, it's going to roll in probably pretty hard. So we shall see. Anyways, thanks for showing up, you guys. We'll catch you next week. Have a great weekend, and we'll see where this thing goes from here. But I think it's going to get pretty exciting. Catch you later.
So long, everyone.